And we are back. We want to call attention to CNBC's newest subscription streaming product. It's CNBC Plus. You're looking at it right here. You can stream Halftime Report and all of your favorite CNBC shows like the Worldwide Exchange Show anytime, anywhere, and also on demand. Now, let's get to our calls of the day. All right, first call of the day. We're going to get right to it. Trane Technologies, actually. This is a pretty good one right here. Joe T, you own Trane Technologies, HVAC player, a lot of exposure to data centers and things like that. What do you think about this one?
Going to report earnings, believe next week, and that's really going to tell the story. Stock's down 5%. It peaked in November, along with some of the other industrial stocks. Really hasn't been able to recover since then. Kind of would identify it as a wait and see. I wouldn't really look at the stock right here, get very aggressive buying it ahead of earnings. And certainly, if you're concerned about the decline so far year to date down 5%, I wouldn't take action. Let's hear what they say next week as it relates to earnings, and then we'll go from there.
By the way, you can hear what they say on Worldwide Exchange, having the CEO on a week from today. Another call of the day. We got Spotify. Taking a look at Spotify. Reiterated to a buy at 7:30 at Jefferies. Malcolm, you on this one?
Yeah, this is one, to me, anyone who looks at Netflix and loves the fact that it looks like defensive, recession-resistant company to own, Spotify, to me, is in the exact same camp. I can't see exactly what the numbers look like, but I bet there's an overlap between their customer base that looks pretty attractive. So if you're thinking, man, I really missed it on Netflix, this is a company that also is going to be going to perform very well. It's already shown how inelastic the demand is for its subscription-based entertainment service in bad situations. This is a play to me to ride whatever storm might be coming.
All right, another call today. We got Proctor Gamble upgraded to outperform at RBC. Kind of a tough week for staples overall, Kev, but you own this one.
Yeah, they put a price target of $177 in December. We got out of it a little bit above that. We've been buying it back since 52-week low yesterday. They had earnings which would, as we would expect, had horrific guidance. You're going to see absolutely a continuation of that next quarter. I agree with the call, but I'd be patient re-entering the name.
All right. Also, GE Aerospace price target raised from $225 up to $230. Also called a sanctuary stock by Bank of America. Steph Link, you on this one?
Yeah, it's better than a sanctuary stock, Frank. It's up 19% year to date. It was a great quarter. They beat earnings and they beat total revenues and margins. Margins actually grew 220 basis points year over year. Their guidance was in line despite the tariff issues. They're just handling the situation a lot better, being more proactive, moving supply chains all around the world. And the free cash flow guide of $6.3 to $6.8 billion is better than expected, and that's also up from $6.1 billion last year. So they are really humming on all cylinders. I will say I prefer Boeing versus GE at this price, but I still like GE. It's a core holding, has been for a while.
All right, shares up about 0.75% right now.